Solved problems. T accounts, trial balance, accounting equation. A is equal to L plus OE. Assets is equal to liabilities plus owner's equity. Problem. Mrs. Marivic Penafier, CPA, is the owner of Mindanao Fast Delivery Services, a cargo forwarder based in General Santos City, which is operating in Mindanao area. She presented to you the company's account balance as at December 31, 2014. So you can conveniently start on January 1, 2015. The ledger accounts consisted of the following: debit, credit, cash in bank 1,250,000, accounts receivable 35,000 debit, packing material inventory 25,000 debit, furniture and fixtures 120,000, delivery equipment 2,500,000, accounts payable credit 80,000, unearned delivery income credit 5,000. Mr. Penafier capital 3,845,000. January 1. Established a petty cash fund in the amount of 2,000 intended to pay small or petty expenses. This is to be taken out or to be withdrawn from cash in bank account. 2. Collected from various customers the previous accounts in the amount of 16,000. January 4. Bought various packing materials on account 5,000. 6. Bought gasoline on account from Catalico Shell Station 12,500. 7. Mrs. Penafier withdraw 50,000 from his business for personal use. January 9. Delivered cargo which was already paid in advance in the amount of 5,000. Refer to unearned delivery income. January 11. Received the amount of 20,000 cash for delivery of cargoes to various clients. January 15. Bought gasoline for cash from Caltex 15,000. January 16. Made partial payment of January 6 account 10,000 to Catalico Shell Station. January 17. Billed clients for various cargoes delivered in the amount of 32,000. January 18. Paid in full the account of January 4 P5,000. January 19. Collected in full the previous account balance in the amount of 19,000. January 20. Bought various packing materials for cash 7,000. January 27. Received a bill from Daddy Gas Auto Repair Shop in the amount of 12,000 for the repair of delivery van. January 28. Partial payment of an account with Daddy Gas Auto Repair Shop of 10,000. January 29. Salary advance from an employee deductible against payroll 5,000. Paid in full. January 30. Paid in full the January 6 account with the Catalico Shell Station 2,500. January 30. Received cash in advance in payment of income cargo delivery service on February 8 14,000. January 30. Received a bill for building rental for the month of January in the amount of 15,000. January 31. Paid payroll for the month of January. Salary 35,000 plus cash advance 5,000. Take home pay 30,000. Requirements. Prepare T accounts for the following: cash in bank, petty cash fund, accounts receivable, advances to employees, packing material, inventory, furniture and fixtures, delivery equipment, accounts payable, unearned delivery income, M. Penafier capital, M. Penafier drawings, transportation expenses, gasoline, rental expense, repair and maintenance, salaries expense. Post directly to the individual T account instead of making journal entries and mark January 1 beginning balance for the account listed with balances. 3. Put the T account. 4. Prepare trial balance of totals. Extract the equation A is equal to L plus OE. Trial balance as on 31st December 2014 as given is as under. Account titles: debit, credit. Cash in bank: debit 1,250,000. Accounts receivable 35,000 debit. Packing material inventory 20,000 debit. Furniture and fixtures 120,000 debit. Delivery equipment 2,500,000 debit. Accounts payable 80,000 credit. Unearned delivery income 5,000 credit. M. Penafier capital 3,845,000. Total 3,930,000. Debit 3,930,000. Credit. Let us post the entries to the transactions directly to the individual T accounts instead of making journal entries as required in the problem. January 1 established a petty cash fund in the amount of P2 in the amount of 2000 intended to pay small or petty expenses. This is to be taken out or to be withdrawn from cash in bank account. Cash in bank account debit side January 1 2015 to balance brought forward 1,250,000. On the credit side 112015 by petty cash fund 2000 credit. Petty cash fund account on the debit side 112015 to cash in bank 2000. So there are no transactions in petty cash fund during January. 31st January 2015 by balance carried forward 2000 and 1st February 2015 to balance brought forward 2000. January 2 collected from various customers the previous accounts in the amount of 16,000. Cash in bank account on the debit side 212015 to accounts receivable 16,000 debit. Accounts receivable on the debit side 01012015 to balance brought forward 35,000 as per the opening balance sheet and 212015 by cash in bank 16,000 credit. January 4 bought various packaging material on account 5,000. Purchases account on the debit side 412015 to accounts payable 5,000 debit. Accounts payable account January 1 2015 by balance brought forward 80,000 and this transaction 4th January 2015 by purchases 5,000 credit. January 6 bought gasoline on account from Catholic Shelf Station 12,500. Gasoline account debit side 6th January 2015 to accounts payable 12,500 debit. Accounts payable account on the credit side 6th January 2015 by gasoline 12,500 credit. January 7 Mrs. Penafier withdrew 50,000 from her business for personal use. Mr. Penafier drawings account on the debit side 7 January 2015 to cash at bank 50,000. So this account further there are no transactions. So we are closing this account 31 January 2015 on the credit side by balance carried forward 50,000 and on the debit side 1st February 2015 to balance brought forward 50,000. Cash in bank account on the credit side 7th January 2015 by Mrs. Penafier drawings 50,000 on the credit side. January 9 delivered cargo which was already paid in advance in the amount of 5,000. Unearned delivery income on the credit side January 1 2015 by balance brought forward 5,000. On the debit side 9th January 2015 to cargo delivery services 5,000 debit. Cargo delivery services account by unearned delivery income 5,000 912015. January 11 received the amount of 20,000 cash for delivery of cargoes to various clients. Cash in bank account on the debit side 11th January 2015 to cargo delivery services 20,000 debit. Cargo delivery services account 11th January 2015 on the credit side by cash in bank 20,000. January 15 bought gasoline for cash from Caltex Phillips 15,000. Gasoline account on the debit side 15th January 2015 cash in bank to cash in bank 15,000. So we are closing this account as there are no further transactions in this account during January. On the credit side 30th January 2015 by balance carried forward 27,500 and on the debit side 1st February 2015 to balance brought forward 27,500. Cash in bank account on the credit side by gasoline 15,000. January 16 made partial payment of January 6 account 10,000 to Catholic Shelf Station. Accounts payable on the debit side 16 January 2015 to cash in bank 10,000 debit. January 16 cash in bank account on the credit side 16 January 2015 by accounts payable 10,000. January 17 billed clients for various cargoes delivered in the amount of 32,000. On the debit side, accounts receivable on the debit side 17 January 2015 to cargo delivery services 32,000. Cargo delivery services account on the credit side 17 January 2015 by accounts receivable 32,000. We are closing this account as there are no further transactions in cargo delivery services in the month of January. On the debit side 31st January 2015 to balance carried forward 57,000 and on the credit side 1st February 2015 by balance brought forward 57,000. January 18, paid in full the account of January 4, 5,000. Accounts payable account debtor 18,02015. To cash in bank 5,000 on the debit side. Cash in bank account on the credit side 18 January 2015 by accounts payable 5,000. January 19, collected in full the previous account balance in the amount of 19,000. Cash in bank account on the debit side 19 January 2015 to accounts receivable 19,000 debit. Accounts receivable account on the credit side to cash in bank 19 January 2015 19,000. We are closing this account again also because there are no transactions in accounts receivable account during the month of January. On the credit side 31st January 2015 by balance carried forward 32,000 and on the debit side 1st February 2015 to balance brought forward 32,000 debit. January 20 bought various packing materials for cash 7,000. Purchases account debit on the debit side 20th January 2015 to cash in bank 7,000. We are closing this purchases account also. On the credit side 31st January 2015 by balance carried forward 12,000 and on the debit side 1st February 2015 to balance brought forward 12,000. Cash in bank account on the credit side 20th January 2015 by purchases 7,000 credit. January 27 received a bill from Dadlanga's auto repair shop in the amount of 12,000 for the repair of delivery van. Bills receivable account debtor 27 January 2015 to repairing services income 12,000 on the debit side. Repairing services income account 27 January 2015 by bills receivable 12,000 credit. We are closing this account. On the debit side 31st January 2015 by balance carried forward 12,000 and on the credit side 1st February 2015 to balance brought forward 12,000 credit. January 28 partial payment of an account with the Dadlanga's auto repair shop 10,000. Accounts payable on the debit side 28th January 2015 to cash in bank 10,000 debit. Cash in bank account on the credit side 28th January 2015 by accounts payable 10,000 credit. January 29 salary advance from an employee deductible against payroll 5,000. Advances to employees account debtor 29 January 2015 on the debit side to cash in bank 5,000. Cash in bank account on the credit side 29 January 2015 by advances to employees 5,000 credit. January 30 paid in full the January 6 account with the Catholic Shell Station 2,500. Accounts payable account on the debit side 30th January 2015 to cash in bank 2,500. We are closing accounts payable account also as on 31st January 2015 by balance carried forward 70,000 and on the credit side 1st February 2015 to balance brought forward 70,000 credit. January 30 cash in bank account January 30 2015 by accounts payable 2,500 credit. January 30 received cash in advance in payment of incoming cargo delivery service on February 8 14,000. Cash in bank account on the debit side 30th January 2015 to unearned income 14,000 debit. Unearned delivery income on the credit side 30th January 2015 by cash in bank 14,000. We are closing unearned delivery income account on the debit side 31st January 2015 by to balance carried forward on the credit side 1st February 2015 by balance brought forward 14,000. January 30 received a bill for building rental for the month of January in the amount of 15,000. Bills receivable account debtor on the debit side 30th January 2015 to building rental income 15,000. We are closing bills receivable account on the credit side 31st January 2015 by balance carried forward 27,000 and on the debit side 1st February 2015 to balance brought forward 27,000 debit. Rental income account on the credit side 30th January 2015 by bills receivable 15,000. We are closing this account on the debit side 31st January 2015 to balance carried forward 15,000 and on the credit side 1st February 2015 by balance brought forward 15,000 credit. January 31 paid payroll for the month of January salaries 35,000 less cash advance 5,000 Take home pay 30,000. Salary expenses account debtor on the debit side 31st January 2015 to cash in bank 35,000. We are closing salaries account for the month of January. On the credit side 31st January 2015 by balance carried forward 35,000, and on the debit side 1st February 2015 to balance brought forward 35,000 debit. Cash in bank account on the credit side 31st January 2015 by salaries 30,000, and we are closing cash in bank account also because all the total receipts are 1,319,000 and there is a balance of 1,182,500 at the end of January. So we are carrying forward this balance to February by closing on 31st January 2015 by a balance carried forward 1,182,500, and on the debit side 1st February 2015 to balance brought forward 1,182,500. Advances to employees account on the credit side 31st January 2015 by salaries 5,000. Total debits 5,000, total credits 5,000. There is no balance carry forward in this account. After posting the journal entries direct into the T accounts, there are few accounts with only opening balances and no transactions in them, which are packing material inventory as on 1st January 2015, furniture and fixtures as on 1st January 2015, delivery equipment as on 1st January 2015, Panafloor's capital as on 1st January 2015. Packing material inventory account debit side 112015 to balance brought forward 25,000. The same balance is carried forward to 1st February 2015 to balance brought forward 20,000. Furniture and fixtures account on the debit side 1st January 2015 to balance brought forward 120,000. On the credit side 31st January 2015 by balance carried forward 120,000, and on the debit side 1st February 2015 to balance brought forward 120,000 for the month of February. Delivery equipment account on the debit side 1st January 2015 to balance brought forward 2,500,000. On the credit side 31st January 2015 we are closing the account by balance carried forward 2,500,000, and again on the debit side 1st February 2015 to balance brought forward 2,500,000 on the debit side. Panfair capital account on the credit side 1st January 2015 by balance brought forward 3,845,000, and the same balance is carried forward on 1st February 2015 by balance brought forward 3,845,000 credit side. Having all the T accounts are prepared and the postings are made directly to the individual T accounts instead of making journal entries. Putting the T accounts, now let us list out the closing balances to form into a trial balance. Trial balance as at 31st January 2015. Particulars: debit, credit. Petty cash fund 2,000 debit. Cash in bank 1,182,500 debit. Accounts receivable 32,000 debit. Bills receivable 27,000 debit. Furniture and fixtures 120,000 debit. Delivery equipment 2,500,000 debit. Accounts payable 70,000 credit. Unearned delivery income 14,000 credit. Panafloor capital 3,845,000. Panafloor drawings 50,000 debit. Cargo delivery services 57,000 credit. Repairing service income 12,000 credit. Rental income 15,000 credit. Packing material inventory 25,000 debit. Purchases 12,000 debit. Gasoline 27,500 debit. Salary expense 35,000 debit. Total debits 4,013,000. Total credits 4,013,000. Let us segregate the items into accounting equation. Assets, liability, owner's equity. Petty cash fund asset 2,000. Cash in bank asset 1,182,500. Accounts receivable 32,000 asset. Bills receivable 27,000 asset. Furniture and fixtures 120,000 asset. Delivery equipment 2,500,000 asset. And now comes to liabilities. Accounts payable 70,000 liability. Unearned delivery income 14,000 liability. Now comes to owner's equity. M. Panafer Capital 3,845,000 minus 50,000. Cargo delivery services add 57,000. Repairing service income add 12,000. Rental income add 15,000. Packing material inventory less 25,000. Purchases 12,000. Deduct 12,000. Gasoline minus 27,500. Salary expense minus 35,000. Total assets 3,863,500. Total liabilities 84,000. Total owner's equity 3,779,500. Let us put the assets, liabilities and owner's equity into accounting equation. Assets is equal to liabilities minus owner's equity. Assets is equal to 3,863,500 is equal to 84,000 plus 3,779,500. Total assets 3,863,500 and on total liabilities plus owner's equity is equal to 3,863,500. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.